Boom, there we go. So, yo, what is up for everyone watching this on the YouTube replay? I hope you're having a great Sunday. The market just opened. Apparently, the government shutdown is nearing an end, and the market's pretty excited on that news. Let me tell you how the overnight market's doing, or at least how my stocks are doing. Looks like Calm is down a bit, but if we go look at our tech stocks, AMD's up 2.5, UiPath is up 1, Toast is up 4, Robinhood's up 3. That's good news. Looks like Super Micro's up 4% right now. Let me give you an update on our Robinhood portfolio because if we go down here to the S&P 500, yeah, look at that. The QQQ is up 0.86%. NVIDIA's up 2.4%. So expect most likely a green Monday. Hey, what up, Looney? Hope y'all having a great night. Let's see. So CEG's up 1.3, Google's up 1.2, and so is Meta, or Meta's up 1.5. So it looks like the market's pretty excited on the government shutdown being over. We also have a Roth IRA. Looks like Wix is up, or wait, is that today? Yeah, that's today. Wix is up 3, InnoData's up 2, Calm is down 2, or I guess we'll wait for the volume. The market's only been open for 10 minutes, so we'll really wait for the volume to kick in here. We can also check the watch list, but there are a few stocks I actually want to go over today. I thought that'd be pretty interesting to cover. Well, this is a company that just reported earnings. This is Clear Secure right here. Actually, let me give you a quick update on the stock. So if you've ever been into like an airport, and you've seen those Clear Secure machines, this is the company that owns that. It's like it scans your face and you can skip the line at the airports. This was a really sensitive company to the government shutdown. So I'm very curious to see how Clear Secure will open on Monday. They were already up on Friday, 12%. They reported earnings. That's why they really gapped up 12%. It was a really good quarter. Check this out. The orange line is what the analysts expect. Every single quarter, they had a nice beat on every metric. They beat on revenue. They beat on EPS, which is net income, and they beat on EBITDA. So they triple beat every single quarter, which is great news. They're also just super profitable. They print money. Uh-oh, hold on. It might lag for a second here. Shutdown is over. Apparently, or I heard some news about that. What happened? Yeah, hey, if you want to get this brokerage I'm on right now, it's in the link tree in my bio, that very first link there. But yeah, the revenue grew 15% year over year, and the net income grew by 18. Check that out. They made $45 million in net income. Actually, that you really look at the operating profit because they had a little one-time adjustment. It says it made $116 million net income. They didn't actually make that. You look at the operating profit, and you can just see these year-over-year growth rates on Clear Secure have been phenomenal. But they made $45 million net income. It's after paying $8 million of taxes. They made $45 million of after-tax net income, and the dividend only cost $16 million a quarter. If you're wondering why does it say $42 million, that's because they frequently do these special dividends. So here's an interesting company that has a normal 1.4% dividend, but look, they pay $1.25, $1.25, but then look, 0.125, but notice they then did a double. They basically doubled that. They did 0.27 special dividend, which is pretty cool, just to reward the shareholders. And with the profits being at all-time highs, maybe they'll do another one of those special dividends. That's free passive income. So yeah, that's Clear Secure. And they traded a fair amount, 21 PE. What's the... well, anyway, that's interesting one. Hey, what up, Tommy? Good to see you, man. Someone said DXCM. Hold on. I want to check out my, oopsie, I just changed it a little bit. Some interesting stocks that I am watching. This is a pure dividend play. So this is Pfizer right here. They actually just bought a company called Metsera. They actually outbid Novo Nordisk for it. So Novo Nordisk was trying to buy this company. If you're wondering what is Metsera, that is a weight loss company, and they're buying them for $10 billion. So this is now a way for Pfizer to get into the weight loss prescription. They own a bunch of different prescriptions like Viagra. This stock hasn't done too well, and I honestly don't know if I'm going to buy it. But they're certainly interesting because they really, really do, in my opinion, have a safe 7% dividend yield. So if this one falls another maybe 5 to 10% back down to the low teens or high teens even, I might nibble on Pfizer just because I know the 7% dividend yield is safe. And that's kind of what that's kind of the only thing you want. You just want 7% money of your money back a year in dividends, and then you don't care if the stock goes down even 1% a year because you're getting that 7% dividend. So yeah, the growth isn't too good on this company. On Pfizer, revenue's down 6% year over year on Pfizer, but this net income is good. It's finally back. They made $3.55 billion in net income this quarter, and the dividend costs 2.44 billion. So definitely can't afford the dividend, but we kind of just want to see the growth come back, and maybe this acquisition of Metsera will bring back the growth. Very interesting. Johnson & Johnson's another interesting one with their uh, oncology business. Okay, hey, try not to spam there. What up? Let's get to DXCM here. I saw that one first. Then we'll look at EOSE. What up, Hunter? Yeah, if you guys got any stocks you want to look at, let me know. We'll try and check them out here. Sorry if I don't get to all of them, though. Yeah, hey, we'll look at Elf Beauty. I know Elf Beauty just reported earnings. So this is Dexcom right here. Yikes, it looks like the stock just had a massive gap down on earnings. So the reason they fell so much is because of earnings. Let's see if we can figure out what happened here. Well, let's see here. Earnings Hub, let's see if AI is saying anything. U.S. revenue grew by 21%, driven by increased adoption of glucose monitoring products and expanded market penetration. So I don't know what this company does. Looks like some medical device company. International revenue increased 22%, reflecting successful geo expansion. Product innovation contributed over 100 million in first-year revenue from Dexcom Smart Basal. Ongoing. Okay, whatever. Let's go look at what they reported, because apparently investors weren't too happy. It looks like they beat on revenue, they beat on net income, and they slight beat on EBITDA. So I do wonder why the stock did fall a bunch. The net income is really good right here. Check that out. 280 million. I don't know. It's interesting. They pay a dividend. No dividend on this one. Yeah. All right, so hey, Nick said Iron Mountain stock. Yo, I love Iron Mountain right here. I actually bought one more share of them in my Roth IRA. So yeah, if we go to our Robinhood portfolio right here, we actually own 11 shares of Iron Mountain. This is a data center REIT. Another company that just reported good numbers was Data. They announced like a $25 million new contract from the government or something, with crazy good news. But Iron Mountain's my largest holding in there. They just rose their dividend by 3%. So this company actually has a 3.3% dividend yield. And I love them because they have a rule where they keep their dividend payout ratio in the mid 60s. So they don't let their dividend payout ratio get out of the mid 60s. We go to their global data center business right here. This is what I love. The data center business is up 33, after grew 20, after grew 27. After grew 30, like they're on a streak of growth. Like the growth rate is growing as well. As we know, data centers are booming. Also, this corporate and other business, not sure what this is, but check that out. Like these year-over-year growth rates are the reason I like Iron Mountain so much. I think they're going to be one of the growthiest REITs out there. Safe dividend, 3.3% yield. I think they're going to be real growthy. So it's my favorite REIT. That's a real estate investment trust. Whenever you receive dividends from those. Also, how REITs work is the dividends you receive are taxed as short-term capital gains. So the REIT doesn't pay income tax, and then you do. But that's why I like it. That's why I own Iron Mountain in a Roth IRA. They have some kind of lawsuit going on. Yeah, that for that other stock, I think, or for Dexcom, someone said. Okay, let's get to Elf Beauty right here. They actually did some sort of acquisition that I am wondering about. So check this out right here. I guess that's a nasty little gap down on earnings. Not too good. If we go to their revenue right here, revenue is up 14% year over year. Most of that growth was actually from an acquisition. If we go to the cash from investing activities, again, if this is negative, that means they're buying assets, buying a company, buying land, whatever, and they just bought a beauty company for $600 million. That's also explains, look at that, why the assets jumped up so much from the previous quarter. So I don't know if that hurt their net income or something, but investors weren't too happy with that right there. Maybe if the earnings hub will tell us anything. Nope. Anywho, they did some sort of acquisition. I don't know what's the most. So again, because the net income went so far down, that's going to crush the PE, or that's going to make the PE ratio skyrocket and also crush the EPS. So what platform do you use? Oh yeah, hey, by the way, this is a brokerage right here where you buy stocks on. Yeah, if you want to get this platform, it's in the link tree in my bio, that very first link there. All right, so something, what up, dude? He said, bros, let's do, Riot, that's a Bitcoin mining company. A lot of the consumer, like food stocks, like Chipotle, Kava, Wendy's, they're all done terrible recently. And I think Dutch Bros is one of the better, more resilient plays just because they're smaller. If we go to their company-operated shops right here, the stores, the ones that they own, the revenue's up 27%, after grew 38, after grew 29, after grew 53. So they're on a streak of growth right now. And they also collect their franchise royalty revenue. It looks like it only grew 2.8% year over year. I do wonder about that. May actually see if they'll tell us anything here. Nope. That's right. Anyway, if we go to their net income down here, they make good money because they just got net income positive. But I mean, the growth rates, the year-over-year growth rates are good, 20 to 30, 40 mil of net income a quarter, which is good news. So anyway, as long as they keep up this growth, probably just from opening new stores, the stock should be fine. But I know the whole industry is struggling right now. Like Dutch Bros is kind of similar to Starbucks. If you go to Starbucks stock, they're the same price as they were in 2019. Their margins have collapsed. Look at this. Here's the sad truth about Starbucks. So we can see their number of stores right here. Oh, wow. Look at that. So their number of stores went from 41,000 to 40.9. So their number of stores actually went down. They closed some stores. But look at this. Here's the bad news for Starbucks. The revenue is up 5. So their sales are up 5. But then this is real. This isn't like some one-time adjustment either. The net income has collapsed. If you go to their net margin, like it used to be great. It used to be 10, 13%, but it's unfortunate. The margins have collapsed to Starbucks. Anyway, Dutch Bros is a better play than Starbucks for sure. I like McDonald's. They're the best. So someone said Riot. So I'll never really recommend these kind of stocks because this is a Bitcoin mining company. I think some of them are like transitioning into, look at that. Bitcoin mining is 90% of the revenue and they're slowly getting into like server hosting, whatever. I don't know. I've looked at all the Bitcoin mining companies, Hut 8, Core Z, Hive, Blockchain, what's that one? Core Z, they never actually outperform, or Clean Spark. They don't actually outperform Bitcoin. So I would just rather own Bitcoin, to be honest with you, just from what the data shows. Maybe that'll change in the future, but I would just safely, I think Bitcoin would do better in the long run than the company that just mines Bitcoin. That company, they have no moat. They basically just own a bunch of GPUs. It's kind of like Clean Spark. All they do, they just own a bunch of NVIDIA graphics cards. That's the whole company. That's it. And then they just mine Bitcoin. It's not real invest. It's not like a real company. Okay, CEG earnings came out Friday. Yeah, CEG announced like a huge, like I was saying, I have a prediction. I don't know who it's going to be. They're going to do a huge deal with either like Oracle, OpenAI. They said it was like a Fortune 100 company they're doing a deal with. So, CEG, by the way, this is my favorite utility play, best like energy play out there, in my opinion. They are the largest nuclear energy play out there. They literally own 30% of all the US's nuclear reactors. So that's pretty cool. Proposes 5,800 investment plan. Calpine. Yeah, dude, they're buying this company called Calpine. Best acquisition ever. Like, when that goes through, I'm going to buy more CEG eventually. There's so many stocks I love right now. Wait, is the pre-market? Yeah, the market opened 20 minutes ago. Let's actually go check it out super quickly. And then we'll get right back to the stock analysis. Hey, our portfolio is up 0.81. Wow. CEG's up 1.5. Google's up 1.5. Meta's up 1.6. Apparently what I was reading in the news that the government shutdown looks like it's finalized and it's really, it's getting over with. The government shutdown is ending and market will rally on anything. So yeah, QQQ's up 0.9. So hey, if you own stocks, most likely you're going to be green tomorrow. So let's go. And let's not go in case you're trying to buy the dip, because then you can't buy the dip. Hey, Jeff Mack. Shout out to the homie and the member, Jeff Mack, on the YouTube stream. He said CINF. Let's do it. And then I want to check out Weebull stock. Weebull's another one I really like. So let's check it out. Okay, so hey, what up, Slow Mo and S Lopez? Good to see you all. Hope y'all are having a great night. There was another someone who said hi, and I never said hi back, and it was someone I know. So if you said hi to me earlier and I didn't respond, sorry. But here's hello. So I hope everyone's having a great Sunday. So here's Cincinnati Financial. Look at that. They're at an all-time high. I'm pretty sure JP Morgan, Goldman Sachs, they're all at all-time highs as well. And as well as this stock being at all-time highs, this is the chart that doesn't include the dividend. As well as you have a bunch of stock price appreciation. You've also received 2% in dividends, and they raise their dividend every single year, faster than inflation, safe 22% payout ratio. So let's see, commercial line insurance, investments, personal lines, other earned premiums. So it looks like this is a pure insurance company. I actually own Progressive. Looks like this one's done better than Progressive Corp, but I like Progressive because they have a way lower dividend payout ratio and dividend yield. But yeah, Cincinnati Financial, incredible, legit all-time high on this company. So yeah, and plus the dividends, let's see how much the dividend costs. So net income was $1.12 billion. So they made one, and that's just this quarter. So they made 1.12 billion of net income just this quarter. And the dividend cost 134 million a quarter. They could pay for the entire year of dividends twice over just in this quarter of after-tax net income. Pretty crazy. They're really good. You know, I'm actually down bad on Progressive Corp. Speaking of Progressive and some insurance companies, let me sort this. This looks weird. Okay. Yeah, we are down 11% on Progressive. You know, it looks like they are green in the pre-market. Looks like there's a lot of green in the pre-market. Commain's down 1.6. AMD's up 2.2. Hood is up 3.4. SoFi's up 2.8. Reddit's up. So yeah, this is our risk on portfolio that really hasn't done too well. Uh-oh, hold on here. It might lag for a second. Yo, by the way, my Wi-Fi is not too good, so if it's lagging, then that's my fault. Hey, Brian, good to see you, homie. Hope you're having a great night. Yeah, here's our all-time performance. Okay, we're good now. It says we're green. Yeah, we're only up 18% all-time in this portfolio, so we've definitely underperformed. Okay, let's get back here. I'm buying SEZL on Monday. Yo, they're trading at, yo, Jace, good to see you. Tequila on Sunday, fun day. Hey, nice. I'm buying SEZL on Monday. I'm actually buying, or I'm not buying more of, but they trade at 17 PE. I didn't realize this. Even though ticker symbol Dave has like appreciated so much in stock price, even after appreciating so much, they trade at a 19 forward PE. Like, that's interesting. Like, that's the kind of stock that's just going to continue to win. Oh yeah, let's get to Bull right here. I said I'd get to Bull. Yeah, let's do it. I actually just made a YouTube video about this. So if you haven't seen that and want to see my full analysis on this stock, check out my most recent YouTube video. But this is ticker symbol Bull. We literally have 5 shares of this, so big Bull. But here's my interesting bull case for ticker symbol Bull. So Bull is literally this app right here, this brokerage publicly traded. And I've had a brokerage in them for many, many years. And Weebull just added this in the middle of my screen, the prediction market. And that's where they make a really high margin transaction fee. Also, when you do crypto, they just added crypto back as well. It says new next to it. Weebull just brought back crypto as well. So whenever you buy and sell a stock on Weebull or Robinhood, they don't make too much money, like a fraction of a penny. But whenever you do this prediction market stuff and the crypto stuff, they make a juice of a margin of profit there. By the way, I don't own any crypto and I don't do that prediction market stuff. I kind of wish I owned some crypto with how good Bitcoin's doing, but really just Bitcoin and Ethereum I'd own meaningfully. All the other altcoins I'd not own meaningfully, but the prediction market stuff's in there. But anyway, that's why I think that Weebull just added that stuff. And I think analysts might be underpricing in how much like growth. Stocks, first off, they just IPO'd about half a year ago. They're at an all-time low. They're worth 4.9 billion. I think they're worth putting some money into. Hey, not financial advice, but they're definitely interesting. All right, let's see here. Hey, let's see. Ooh, here's some choices here. What's your opinion on NWL? All right, let's check. Is that Newell Brands? This is the company that owns like Elmer's glue. Does anyone remember when like the slime trend was really popular? Like people made a bunch of slime using Elmer's glue. People were doing like call option stuff on this stock because of it. But let's see here. Dividend. They have a crazy dividend, but it might be unsustainable. Notice, look at the dividend. They have an 8.8% dividend. That's after cutting it. You know, in 2022 was 92 cents. Now it's 28 cents. You know, 2023 was 44 cents. So the dividends had to get cut rapidly. And that's because how do you pay a dividend when you lose net income? You know, like if you average out the 4 quarters, they're net income negative, sadly. Or actually the past 2 quarters have been good. They are net income positive the past 2 quarters. But yeah, that's, I don't love this name. Yeah, if we go to revenue, yeah, look at this. The sales, the revenue, the lifeblood of the company, it's down 7% after it fell 5%, after it fell 9%, after it fell 19%. Yo, so they are on a streak of declines, and that's kind of what justifies the stock being at all-time lows. The numbers, the financials, in my opinion, always explain the stock in the long run. It explains why Palantir is at all-time highs and they're at all-time lows, sadly. That's why, and we don't really do technical analysis on here. We focus on the financials. So hopefully I can offer a unique perspective. By the way, if you want to hit the follow button, I appreciate that. We stream every single day and I sell nothing, literally nothing. I have no course, book, WhatsApp, Telegram. I'll never ever follow you. I'll never DM you. Someone asked me, said earlier, is that you that just DM me? Like, that's not me. I'll never follow you or DM you. I sell nothing. I'll never, none of that. The only thing I do have is a YouTube channel. Best way to support me is just sub to the YouTube channel. I'm trying to build up my viewers on there. But anyway, let's keep going here. News agencies reporting deal on reopening the government vote. Oh yeah, that's kind of why the market's so bullish right now. from what I see. So let's check it out. For Fortuna Silver Mine. So yeah, if you're looking for a silver play, some people, instead of buying the actual commodity of silver, sometimes people will buy like the silver mining companies. And this one owns a bunch of silver mines. They're called Sandgo, Mansfield. So that's interesting. By the way, oh, these are good net income numbers. Check it out. They're making great net income the past couple quarters here. So whenever silver's doing good, this stock will do good. You know, they'll sell off a lot of their silver. I will note this, and this is actually, that stock hasn't done too good on the long run. Did you know the whole market of silver, like the whole market cap of silver and the whole market cap of copper combined, is still worth less than Google, which is kind of crazy. Gold is worth 24 trillion. It's the most valuable asset. Then I think it's Saudi Aramco. Then I think it's Nvidia. Then the S&P, and then yeah. Okay. Yeah, so there's your silver play. Crypto is ripping higher tonight too. Yeah, hey, what up, Jeff Mack? I know you're posting always in the Discord, stuff like that. Yeah, check this out. Here's the S&P right now. The S&P's up 0.55. Nvidia's up 3. QQQ is up 0.91. Let me just check on crypto really quickly. Where's just Bitcoin? See, Robinhood's made this real difficult to just find where Bitcoin is. But I'm sure it's doing good. All right, let's see here. The Honest Company. Yo, good to see you, Crispy Taters. Yes, sir. SHLD ETF a good buy. Then we'll look at the Honest Company. So here's SHLD. If you like the aerospace and defense industry, if you're like, I want exposure to a aerospace and defense play, but I don't know which one to buy. Do I buy like Raytheon or a Palantir or a Rheinmetall or a Northrop Grumman? You could just buy this ETF instead. This ETF breaks your money up for you into the top aerospace and defense names that should just all collectively win together. It's a more diversified, kind of safer approach into just picking one stock. So there you go. It's a great ETF, actually, to get exposures like specifically to that sector. So here's the Honest Company. I've never been a fan of this stock, really. They're up 15%, but that's after they fell like an insane amount. So but it's good to see that they're slightly recovering. Let's see what their earnings were, because I don't even know what happened here. Let's go figure it out. So, yeah, this was my concern. The growth, the slow growth. This is what I've been telling people. Like, look at last quarter. This is what the last time I've analyzed this stock on this quarter, looking at this exact numbers like 20 times on stream, and every time I tell people, I'm like, I wouldn't buy this name because the growth looks like it's gone, and the growth just went negative, sadly, and that's really what's going to put a huge strain on this stock right here. So yeah, the growth is negative. Sales are down 6.7. If you're wondering what does this company do, they just sell diapers and wipes is most of their business. Luckily, they are still net income positive. They still made net income this quarter. So that's the saving grace. They made net income. What's the market cap here? 297 mil market cap, 44 PE. That was so that was a big miss versus the analyst. You know, analysts expected 99 mil. They only reported 92 mil. So that is unfortunate. And I think that explains why the stock gapped down so much. So yeah. All right. Hey, we cannot cover DKNG sadly because of the industry. Hey, Evan, we literally just looked at Bull like 2 stocks ago. So if you give me a while, we'll look at them. By the way, if you missed anything, I'm also streaming on YouTube, so you can like rewind it. So, okay, let's check out this one right here. AEM, is that just a gold play? So yeah, this is just a gold mine. Pretty much just follows whatever the commodity of actual gold does. It's almost like gold with a dividend. So if we look at the yield, you get a 1% dividend with this ETF or the stock right here, and they just own a bunch of gold mines like the Detour Lake mine. Canadian, where the headquarters. So 85% of the revenue is Canada and then those other countries. So anyway, it's just like a gold play. Yeah, look at that. They made $1 billion of net income this quarter. That's after paying 600 mil of taxes or 600 mil to some of that to something as a fee too. But anyway, it's a pseudo gold play. Interesting. So let's look at Coreweave right here. Ooh, let me look at Novo Nordisk. They lost a bid to Pfizer. Pfizer outbid them. That was crazy for the Malenta acquisition. So what was this stock right here? Oh yeah, Coreweave right here. You know, Coreweave is actually a stock owned by Nvidia. If we go to the Nvidia portfolio right here, their largest company, their largest holding is actually Coreweave. They've been doing a lot of partnerships. They report earnings tomorrow. So today's the 9th. They report earnings on the 10th. So get ready for their numbers. Post market tomorrow, projected revenue. Let's actually go see. They have this brokerage has a cool earnings. So hey, try not to spam in chat there. Coreweave expected to report strong revenue growth driven by AI infrastructure demand and expanded partnerships. Okay, whatever. But this is what I love about this stock right here is how growthy they've been. If we go to the revenue right here, again, they just IPO'd, so there's not too much history, but this is what we do get. The revenue went from 390 mil to 1.2 billion. This was a record. So this was a record 1.2 billion. Analysts are expecting in 2 quarters the revenue to be 1.8 billion. Like more growth is expected, and I think they're going to beat on these expectations as well, just with how all the deals they've been getting with so many different companies. Let's see. Oh no, what I just clicked here. Weekly brief or weekly news. Vast Data and Coreweave signed $1 billion infrastructure agreement, AWS, whatever. So anyway, Coreweave's interesting. It's really betting on earnings tomorrow because they report earnings tomorrow. So if you buy it now, you're kind of betting on that. But anyway, hey, all about, if you want to get this is a brokerage right here where you buy stocks on. If you want to get this app I'm on, it's in the link tree in my bio, that very first link there. Okay. Hey, what up, Harris? He said UEC. This is a uranium play. So as we know, a lot of the nuclear stocks have been booming, and if looks like the administration is starting to really favor nuclear assets, and nuclear reactors need uranium to function. So a lot of the uranium plays have been booming, and specifically because of all the tariffs and stuff, we're no longer sourcing our uranium from Russia and China. We're sourcing our uranium now from US and in Canada. So a lot of these local uranium plays have been booming, and check out UEC. They actually bought a uranium mine off Rio Tinto, which is another really big stock. They actually have real revenue. They made 49 mil of revenue this quarter. They're still losing money every quarter, but phenomenal balance sheet, and they can afford these losses. Literally no debt at all, lots of cash, but they have real revenue and a real asset. Well, I do like this one. If you're looking just to invest in the whole uranium industry, check out ticker symbol URA. It almost looks identical to the price of that stock we just looked at. Pretty cool. Okay. Novo Nordisk, let's do it. So Novo Nordisk, this is your weight loss company right here. Hey, we'll look at any preference between Adobe, Salesforce, or PayPal. If I had to pick one, I pick Salesforce. So here's Novo Nordisk though. Yikes, this is not too good looking of a chart. So this stock right here, so Pfizer acquires Medsera for $10 billion as Novo Nordisk exits the bidding. I can't believe that. So Medsera cited antitrust concerns, so they let Pfizer acquire them over Novo Nordisk. So anyway, Novo Nordisk, they're a $200 billion company. That's after the huge decline. This is the company that owns Ozempic. You know, Elon Musk is on Ozempic. They also own Wegovy. And the reason the stock multiple is collapsing is because they actually lose their exclusivity for Ozempic in 2 years. In about 2-3 years. So that's what's really suppressing their multiple right here. And that's why it was also sucked for them that they lost this acquisition for Medsera, because that would have capped them out. But if we look right here, 94% of the revenue is their diabetes and obesity care products. Their margins really did just fall. Look at this. So the revenue grew 10%. So revenue's up 10, but net income fell by 22. And that's really true. That kind of rhymed, but the net income's down by 22. It's really true. And what that means in English is basically the margins fell. The net margin went from 38 to 26. So this isn't great. Yeah, look at that. So they just reported earnings. Analysts expected 12.1, then they reported 11.7. So honestly, I think a lot of the risks, a lot of the negative news might honestly be priced in. So honestly, the risk to reward might be decent. Like maybe I wouldn't have this as a meaningful size position yet, or like I'd nibble on it. But honestly, I might be looking to nibble on Pfizer. Like Pfizer as a weight loss. What's Pfizer's market cap? Hold on. PFE. They bought Medsera for $10 billion. So that's 1/14 of the entire market cap. So that's almost like a game changer for Pfizer. Okay. Will the reopen be any good news for Sprouts Farmers Market? No, or not anything specifically. Oh, actually the Snap-on stuff, but I don't know. Yeah, hey, what up, sports guy? Yeah, dude, futures are booming. Check this out right here. Wait, the QQQ is up 0.9. Nvidia's up 2.7. Our portfolio is up 0.85%. I can't believe this. Google is up 1.6. Meta's up 1.6, nearly identical. Here's also our Weebull portfolio. What's up the most in here? AMD's up 2.4. Path is up 1.6. Futu, Hood, Reddit. PSIX, was that real? Up 5.8. That's great. So anything down? No, nothing. Wait. So Calm went green? Hold on. Then that means our Roth IRA just went green then. Let's double check that. Yeah. Heck yeah. Okay, cool. Okay, let's look at some more stocks here. Yeah, hey, well, we're going to be live for at least another hour. So for sure, let's keep going here. October and November, worst time. Hey, what up, unboxing? Hi, is there any edge in Forex? Not really. Forex is just trading the differences of currencies. There's no real fundamentals or like it's pure trading. That's a trader's game, but I think stocks, this is a buy and hold game. You just do something simple. You buy the S&P 500 ETF or index fund. You just do nothing, and this isn't get rich quick. It's to build and slowly preserve your wealth. It's to get 10% returns a year, 8 to 10%. So it's to turn $100 into 108, the 108 into 120, and then it snowballs again from 120 to 150, like in the compounds. And then as you allocate more, it snowballs even more. You reinvest the dividends, and the longer time in the market beats timing the market. I've always thought so. And also, if you're going to buy stocks, buy ones with good fundamentals, I think, and S&P 500 companies, Amazon, Google, Meta, all these great stocks. So let's see here. Hades, what up, dude? He said PDEX. Ooh, Perimeter Solutions. We'll check that one out. Check Grab. Hey, remind me to look at Grab, dude. Yeah, hey, Evan, we just looked at, we'll look at Bull in a little bit, for sure. Because I actually, my most recent YouTube video is a whole analysis on bull stock. So here's Prodex right here. So if you look in the top right, the market cap, that's how much the whole company is worth. The whole entire company is worth $100 million. So if you wanted to, you could buy the whole company for $100 million. You're buying into the company at that valuation. Here's what I like about this company. I normally don't even touch the small market caps, like $100 million market cap. Don't even go near them. But here's a $100 million company that made $4.6 million of net income this quarter. That's 4.6% of the market cap. Easy math, because they're worth exactly 100 mil. 4.6 mil is near 5% of the whole company. Then 1.2 mil, 3. They're actually making positive net income every quarter, and they have a really good balance sheet. Looks like they're in the medical device industry. And they also repair it. Pretty cool. So they have to sell the devices. And then anyway, looks like they had a big beat on earnings this quarter. Wouldn't trust a meaningful amount of money in them, but they're definitely interesting. There's a great ad called Earnings Hub. Do you know about it? I actually don't, Sports Guy. Hey, dude, Stocks and Sports Guy. Thanks so much for all the gifts there. I do appreciate that. And hey, Chitty, thanks for the rose. I appreciate that, homie. All right, so check out Dash. Let's check out DoorDash right here. So DoorDash was noting that, and it kind of made sense that whenever you do a transaction on DoorDash, you're already paying a crazy high fee. DoorDash isn't able to raise their fee anymore. And in the past year, they've actually had to pay their drivers a slight bit more. So it looks like that was hurting their margins. But I think they just did some acquisition. Actually, let's check out what this brokerage has to say. Revenue growth was fueled by a 21% increase in total orders, 25% growth in marketplace. Profitability increased. Okay, so yeah, this is what I was talking about. The acquisition of Deliveroo expanded DoorDash's global footprint. So if you've never heard of them, that's because they're like an internet. They're kind of like a small version of a Grab Holdings, like a Grab. But yeah, check this out. Expected to contribute approximately $45 million to next quarter's adjusted EBITDA. So that'll be interesting. But yeah, if we go to their, DoorDash makes good net income. This is why I really like DoorDash. Their earnings were great, actually. If you look at the operating profit, record profitability quarter. They've never been more profitable than this quarter. They're making great numbers, a couple $100 million net income every quarter. The growth rate is really good. Sales are up 27% year over year. I love the acquisitions they're doing. Cash from operations at a record. So DoorDash is the only bad part is they're still too expensive. According to my forward PE metric, being even a little generous, they're trading at 50 times next year's net income, even after the dip. So I'd wait to maybe buy the dip on them. I'd nibble here, but I wouldn't buy anything meaningful. Yeah, I don't know what Nibiru is. Is that like a planet or something? By the way, if you have a stock you want to look at, please give me the ticker symbol and we can check it out for you. Okay, let's get to Perimeter Solutions right here. Hey, they're like Samsara. What I don't know what those are. If you gotta give me the ticker symbol, we'll check them out for you. So anyway, here's Perimeter Solutions right here. I actually bought them in my Roth IRA. Where is that? So yeah, Perimeter Solutions, we're up 11% on them. Nothing crazy. I wouldn't have this as a meaningful size position. They're at a number. They're at an all-time high. They're the number one aerial fire retardant play. Like, if you ever been in California and seen those like red airplanes dropping the fire retardant stuff, they're the only like ESG approved actual like product. So they're the only one. Yeah, so check this out. They're in fire safety products. They had a look big beat on earnings. Check this out. Analysts expected 238. They reported 315. The EBITDA as well was a nice beat. But yeah, fire safety products. That's at a like these year-over-year growth rates in the middle are incredible. So that's at a record. How about their specialty products? Or what percent of the revenue is that? So, okay, so this is a smaller portion. So specialty products, that grew 15% year over year. So that's nice growth. Anywho, I do like them. I think their free cash flow is really good this quarter too. Take a sip of my tea here. Hey, shout out to the homie Josh, dude. Good to see you, man. Hope you're having a great Sunday. Game Square was at all-time low. Hey, what up, world free speech? Institutional money will be stepping to XRP. Okay. All right, let's check out some stocks here. Is Moomoo app easy? Yeah, hey, I think so. What up, Z? Yeah, if you want to get this brokerage I'm on, it's in the link tree in my bio, very first thing there. Yeah, try not to spam there. Yeah, hey, we'll get to grab there. Yeah, hey, we'll try not to spam, man. Okay, can you try Acre Solutions? Yeah, hey, Zeno, if you give me the ticker symbol, we'll check it out for you. Hey, Bob said NTLA. Let's check out NTLA. Then we'll look at PPG. Monkey D. Luffy, what up, dude? Synopsis and Cadence. Yo, Cadence is a very niche, interesting company. We'll check them out. So here's Intellia Therapeutics. They're worth $1.1 billion. They're at an all-time low. Yo, there must have been some sort of good news, some really good momentum on the stock, and then all of it got bled out by their earnings. Let's see, are they revenue lists? So, whoa, the revenue's, okay, well, actually, the revenue is 13 million. What are they doing in net income? Well, yeah, so I can almost bet they're losing a lot of money every quarter, just judging off their balance sheet right here. Looks like their assets are going down every quarter. But yeah, look at that. They're losing 100 million of net income a quarter. That kind of explains it. So remember, the whole company was worth 1.1 billion, and they lose 100 mil in net income a quarter, or sometimes more than that, which is over 10, basically 10% of the whole company. Whenever you lose net income, that money has to come from somewhere. So the assets are just depleting down every quarter. So ARK Invest said ARK, ARKK, that ETF was the largest shareholder. Okay, you know what, Evan, let's do it. So, all right. We'll check out Bull right here. So this is Weebull stock. This is a stock actually. Hey, if Josh, you're still here, let me know what you think about this stock right here. So here's Weebull. They just IPO'd. I know you like the IPOs. They just IPO'd about 6 months ago. I think they're finally like a decent risk to reward because they're at an all-time low. Well, again, they're at an all-time low, but they just IPO'd like half a year ago. But Weebull, the reason I think this one's an interesting buy. You know, that stock we're looking at, Bull, is this brokerage right here, publicly traded. So it's this app right here, publicly traded. I've had their brokerage for a long time. They actually just brought, literally in the past 2 months here, the prediction markets in the very middle of my screen here. And they're going to make, I think, a lot of money from that. They also just brought back crypto. So whenever you do crypto or whenever you do this prediction market stuff, they make a high margin like fee off every time you do that. Like whenever you go buy and sell a stock, they're not making too much high margin, or they make like a fraction of a penny whenever you do that crypto and other stuff. I think so. That's why I think Bull, the growth rate is going to be higher than what the analysts currently think. The growth has already been really good. Revenue's up 46%, but I think it's going to be even higher, and they're going to be in like a Robinhood type transitional phase. Who knows? So yeah, hopefully that was, hey, thanks again, Evan, for all the gifts there. I appreciate you. Thoughts on Robinhood having a, yeah, hey, yeah, Robinhood's a phenomenal company as well. I do own Robinhood. I own Futu. I own SoFi. I own Dave. I own a lot of them. So Let's see, CDNS. Let's actually look at Cadence Design right here. Did they report earnings recently? So they did. They reported earnings a couple days ago. Actually, let's go see. I don't know too much about this company specifically. Core EDA segment contributed 71% of the revenue, maintaining market leadership. Their IP system design and analysis segment grew 14%. Announced a 2.7. Oh, they're a European company. I didn't know that. 2.7 euro acquisition of Hexagon D&E business. So that's a big move. What's the market cap? 88 billion. The whole company's worth, and they spent 3 billion buying a new company. So that's interesting. Let's see net income right here. Yeah, check that out. They're making a couple $100 million net income a quarter. I'm going to add them back to the top of the watch list for fun. I love ARM as well. ARM's another phenomenal company. They deleveraged their balance sheet. So Cadence Design's an interesting one. Hey, what up, King Sam? If you were able to choose 5 companies, which would you choose? It would be 5 companies that I already own. I probably pick, just randomly. I'd pick Constellation Energy, Google, McDonald's, Amazon, and probably Comfort Systems. Those are my 5. To just never sell. And by the way, if you look at this is my experiment and this is my promise. If you want to hit the follow button to my TikTok, more importantly, if my YouTube channel, come back to my channel in 5 years or something. I'm going to try and stream every day forever because I love doing this as long as people are showing up. If you look at the top left, this is called my buy and never sell portfolio, where once I buy a stock in here, I legit never sell it. So these are all the stocks that I'm never going to sell and just holding on here. So that means I also can't take any profits. Like even though I'm up, 360%, I'm not allowed to take a single dime of profit. And that's also the reason we're doing so well. And this portfolio's up, 175% all time. Or where this app is cool where it calculates every time you do a deposit, where if I would have put it in the S&P 500 exactly, I would be up 60%. Or if the NASDAQ, I'd be up 76. But my strategy, I'm up 175. Year to date, we're up 82%. We were doing just as bad at the very beginning. Earlier this year, we were down 16%. When the S&P was down 13, we were down worse. But anywho, let's get back to some of these analysis here. So yeah, if you want to, by the way, I sell nothing. I have no course, book, WhatsApp. I'll never follow you, DM you. I literally sell nothing. Just on here, give my opinion. All right. And also, I'm not an expert. None of this is financial advice. I'm just a college student. Okay, so wait, AKSO. I hope I can find this stock for you. Acre Solutions. I can't find that one. Oh, here it is. Like this might be it right here. I don't think this is it. I can't find that stock for you. I did try and look though. Here, if you got another stock you want me to look at, Zeno. Let me know what you think. Do you recommend any EU companies worth a long-term hold? Absolutely. Well, there's Spotify's an interesting one, but I actually just bought as one a huge EU play. It's Ferrari, ticker symbol race. Key results on one page. So they just also reported earnings. So I like them because you get a 1% yield, over 1% share buybacks, and then and then hopefully 5% plus in share price appreciation every year. I just think with Ferrari, if you buy it now, and I'm pretty much break even on my shares, you should get S&P 500 type returns, 8 to 10% a year. Not financial advice, but I that's my hope there. And Ferrari, the customers who are buying Ferrari cars are the kind of customers that tariffs and inflation doesn't matter. Ferrari can increase the price of their cars to match their tariff for whatever input costs. And their customers will pay it. They say like the reason there's no Ferrari ads on TV is because they're not watching. Whatever. Okay, let's see here. Archer. Are you talking about Archer Aviation? Does day trading work? It can. I don't do that though. I'm not good at that. I've definitely tried. NVTS. NVTS. Hey, I don't. This is wait. Yeah, this is the company that's trash, man. I would not trust real money with this company. This company was literally going bankrupt, but the only reason they're not bankrupt is because Nvidia couldn't allow them to, and Nvidia gave them basically a bailout. But if we just judge this company off their revenue, again, the reason they're gapping up and having all this momentum is because of Nvidia partnership. Their actual, this signals bankruptcy. Like the revenue is down bad. The revenue's down 53%, 10 mil of revenue, losing 20 to 50 mil a quarter. Dang, the revenue is going to go down to 8 million. There's no growth here. So I don't know what Nvidia can. Dang, I didn't realize they lost all that momentum real quickly. But yeah, I wouldn't. That from a fundamental point of view, I don't love that one. Maybe the swing trade Could be interesting. Hey, what up, silly fish? He said Barrick Mining. Oh, ticker symbol B. Oh, that's what he meant by B. And Nokia might be a good European because of Nvidia. Yeah, actually, I heard about that. What's the ticker symbol for them again? If you want me to look at them, we can. But I think Nvidia took $1 billion, or was it $5 billion, or I think a $1 billion stake in Nokia. So here's Barrick Mining. It's pretty much just a gold mining play. Actually, the stock isn't done too good. Just it's the same price as it was back in 2006. It's like you get exposure to gold, but with the dividend, 1.21% dividend. So whenever gold's doing amazing, this will do amazing. Yeah, here are all the actual mines that they own. Carlin, a group of their other mines, and then all these right here. So yeah, and because of the price of gold's been booming, check that out. They made $1.3 billion in net income. That's after the 300 mil of taxes they paid. They're making near $1 billion in net income a quarter now. What's the market cap? They're making $1 billion in net income a quarter. They're worth 50 bills, so 20x multiple. There you go, plus a dividend. So if gold keeps doing great, they'll keep doing great. Hopefully they can find more and more gold in their mines. Who knows? So, okay. Palantir. Yeah, I wanted to get to Palantir. Phenomenal numbers. I'm talking like stellar earnings on Palantir. Their commercial revenue was the best part. I kid you not. So the multiple's still pretty crazy. They traded 108 times revenue. Not 108 times net income, but 108 times revenue. But check this out. The government's their main business. A lot of police stations use their software, the military, the Air Force, even ICE. So from an ethics point of view, some people don't like these. But yeah, look at this. The revenue's up 55%, after it grew 33, after it grew 12. Like the growth rate is growing on this, literally at a record. And not just the government revenue. This is the best part, the commercial side. The commercial revenue grew 73%. Like that is an incredible growth rate. That's what justifies the high multiple. Record net income quarter, fortress freaking balance sheet. Literally no debt at all on this company. So debt-free, $6.5 billion of cash on hand. Palantir is a monster. I'd love to own them. I really would, but the valuation is still too high for me to buy it, even on this dip. Should I buy Ferrari? I don't know. Hey, again, not financial advice. And if I'd recommend always having a diversified portfolio. As much as I love Ferrari, I got 3 shares. I actually just started my position in Ferrari, so I'll eventually have it a little bit of a higher position. But okay. Dylan said IoT stock. Is that Samsara? Okay. Oh, this one's actually on my watch list. Do you think JAG is going to be... Oh, we'll check out JAGX after JAG after this. We'll check that one out. So here's Samsara right here. This is, I think, that No. This might be a semiconductor play. Let me double check here. No. Okay, so this isn't. Let me go see what this company does because I don't know. Looks like it said software infrastructure, AI application. It combines plug-and-play sensors, wireless connectivity, cloud solutions. Well, let's check out the revenue right here. The revenue, hey, this is good growth. Revenue's up 30, after grew 36, after grew 42, after grew 62. Wow, so they actually are on a nice streak of growth. But if we go to their net income, they're actually just now getting net income positive. They're losing way less and less money. They're really narrowing the losses, which is great news. Free cash flow positive. So yeah, we just want to see this company finally get net income positive because what's the market cap on this one? 22 billion. Yeah, we do want to see them, get net income positive. So they report earnings on December 4th. So that's a bit, but yeah. What company what app is this? Yeah, hey, by the way, if you want to get this app, or this actually a brokerage, it's where you buy stocks on, they ask for some information. It's in the link tree in my bio, that very first link there. Full disclosure, it is an affiliate link, so we'll actually both get some free stocks if you deposit $100. It's my favorite brokerage. It's free, no commissions, costs nothing. Okay, what does Amphenol do? Hey, what up, Finn? This is one of my favorite stocks of all time, and I'm legit looking to buy more of this stock, even though it's at all-time highs. They have 3 main businesses. They're mainly a connectivity and cable business. They're actually the ones supplying their copper cables to Nvidia. Nvidia is a big customer for Amphenol Group, but they're also just an M&A beast. They acquire so many companies. Actually, let's check out the earnings hub. Everything about this company is headed in the right direction. I wouldn't dare sell a single share of this stock. Communication Solutions revenue grew. The communication segment grew by 96% year over year, fueled by AI infrastructure. Harsh environment solutions grew by 23. But check this out. Here, I'll just show you what I love. and go to the sales, the total revenue, the sales are up 53. So the revenue's up 53, but the net income is up by 106% to over $1 billion in net income. Like I've owned the stock for a long time. I couldn't, they normally just make 500 mil, 600 mil, but 1.2 billion so suddenly was so good. That's why they've like monstered up in just literally 6 months, like more than doubled in 6 months, like crazy. And not just the net income as well, but FCF, which is free cash flow, 1.2 billion of free cash flow, up 156%. So it's just these year-over-year comps. Yeah, communication solutions. So yeah, they just rose their dividend by like 50%. Their dividend yield's actually now a 0.75. So it says 0.5 or 0.47. It's actually a 0.75 now because they literally just rose their dividend by like 60%, which is going to make my yield on cost go crazy on Amphenol. So they're a good stock. I'm actually looking to even buy more. Even though I'm up so much, I don't mind raising my cost basis. Okay, JAGX. Let me see if I can find that one. Oh, Jaguar Health. Oh, so yeah, hey, we don't really cover these kind of stocks, sadly. If you look in the top right here, the market cap, I can't believe this whole company is only worth 6 million. Only worth 6 million. So it's not even worth looking at. So think about this logically. You buy the whole company for 6 million. You could do that. You could buy this whole company for 6 million. You're buying a company that lost 10 million in net income this quarter, 10 mil last quarter, 10 mil. So it's like, no wonder they're at all-time lows. Just like that, the numbers explain it. Someone said, speak about MUSA, please. So yeah, hey, this is my favorite way to get exposure to oil and gas. I think they're going to be the growthiest oil and gas stock of all time. Or I don't know about all time, but one of the growthiest names out there because of its just math and rules. Check this out. Most oil and gas stocks, you look at Chevron, Exxon, EOG, whatever. You look at their dividend yield and their payout ratio. They have really high yield. That's what a lot of people love about oil stocks. Those 2 to 3 to 4% dividend yields, like Chevron has, 4% plus, Oxy, 4% yield. But notice this stock only has a 0.55% dividend, but notice the payout ratio. Low, single digit payout ratio, 7% payout ratio. That's the best part. They don't suffocate themselves with a high dividend payout ratio. So what are they doing with the rest of the money that they have? This is the main reason I'm buying this stock. Again, I don't love oil and gas stocks, but it's this company's capital allocation strategy. They literally return 80% of the money they make via share buyback. So as we know, there's total common shares that exist. If you look in the bottom left, there's 18.7 million shares that exist. If we just go to 2019, there was 32 million shares. So from 32 to 18, they have nearly bought back 50% of all the company just since 2019. So I can't believe it. So they do M&A. They're opening new stores, revamping stores. They own a bunch of gas stations, and they're still affected by the oil and gas prices. If we go to the revenue right here, revenue's down 3 after it fell 9. So all oil and gas stocks revenue look like that. But it's this fact that they do the share buybacks is my favorite part, and the low dividend payout ratio. So I want exposure to oil. Like you want exposure to oil as a small portion of your portfolio, because whenever there's war fears, inflation fears, currency fears, whatever, oil does good in those environments. And normally it's also, you like oil because oil stock, they do not outperform the S&P 500 in the long run. It doesn't outperform the tech heavy S&P. But they make up for it because it's defensive, and you get normally the high yields, but not that one. Lower. Anyway, MUSA is my oil play. Kind of ranted on about that one. Do you have a best nuclear energy play that isn't $100 a share? Well, hey, actually, no, I don't actually. Actually, NextEra Energy, NEE, they actually just opened up. Actually, it's $83 a share. So this is NextEra Energy. They're the largest utility play out there. Again, this is not at all a pure nuclear play, but they actually just opened up a nuclear reactor for Google. This one nuclear reactor they're opening is just going to literally supply Google data centers, and Google's their customer. Again, VST's actually, wait, what's Vistra Energy's share price? 191. Anyway, the thing is, never focus on share price, because you can buy fractional shares. Some people just don't like buying psychologically fractional shares. I don't mind doing it, because whether it's $100 a share or it's $1,000 a share and you buy 0.1 of it, you have $100 in that stock. And if the stock goes up 10%, you're making 10%. It's all psychology. It does not matter if it's a fractional share or what. And all that matters is the amount of money you have in it. Um, so hopefully but I get what you mean. Some people don't like the psychological. Like I have other fractional shares of stocks as well, like in my Weebull portfolio. All right. Yeah. Hey, try not to spam there in chat. We'll get to all the, yeah, like Progressive. I own 4.15 shares of Progressive Corp stocks. So, okay. Uh, 3 day. Did you buy the Duolingo dip? I have not, but I'm definitely looking to. Actually, yo, Dominic, what up, dude? He said, SYM. I actually want to pull up Symbiotic right here. Hey, yo, we'll get to AMPX eventually. Try not to spam there. Sorry, man. I gotta. But let's see. SYM. This is Symbotic. This is a warehouse robotics company, and they're helping out Walmart with their logistics hubs. And they help out Walmart so much that Walmart loves them. Walmart decided to buy 13.5% of the entire company. So Walmart is the second largest shareholder. So they're kind of aligned in terms of like it's good that Walmart is a shareholder and their largest customer is Walmart. So like, but anyway, I've looked at a lot of robotics plays. A lot of them are junk. Like what are those? Like Rich Tech Robotics, legit 1 mil of revenue a quarter, no IP, no patents. This company has over 1,500 registered patents. They have real good revenue growth. The revenue is up 25. After it grew 50, after it grew 77, after it grew 166. They're on a streak of growth. So anyway, Symbiotic is a robotics play. One of the probably my second favorite robotics stock out there. If you're wondering what is my favorite robotics play of all time, it's actually Amazon. Amazon is the best robotics play of all time, but obviously not a pure robotics play. But yeah, Symbiotic's cool. Yeah, Dominic, I love that one. Uh, okay, PEMDAS. Hey, ain't that some math stuff? Is that a stock or something? Let's look at Duolingo right here. Duolingo, I'm looking to buy the dip on this one. Like actually seriously looking to buy the dip on this one because their numbers were great. Like they really were. Let's check out the earnings sub. Subscription revenue grew 46%. Daily active users increased 36% to 50 million daily active users. Profitability, so look at this. Profitability was impacted by a one-time $222 million tax benefit. So when we go look at their net income right here, again, they had a little one-time adjustment to their net income. So if you're wondering what is their actual net income number when you remove this net income or remove the one-time adjustment, it's this right here. Let's go. Wi-Fi slow. It always is. But it was a record. It grew 159% year over year. But anyway, this is the best part about Duolingo. If you've never heard of them, that's like that boring language learning app. But check this out. If you pay for a subscription on their app, and their subscription revenue is booming. It's up 45%. After grew 48, after grew 46, after grew 49. The fact that this hasn't slowed down yet, this growth rate, is why I'm still bullish on Duolingo and why I buy the dip on them. And also, it's not just their subscription revenue that's really growthy, but also if we go to their advertising revenue, it's up 45% year over year. Like last quarter's up 55, 38. Like it's just really good growth. FCF, which is free cash flow. Free cash flow doesn't include the gap tax benefit. Free cash flow is up 50% year over year. Everything in this company is headed in the right direction. Deleveraging, again, you focus on the leverage ratio. That's that orange ratio number under it. Whenever you pay off debt, you pay it off with cash. So that's why the assets fall with liabilities. And you focus on the ratio. The leverage ratio went from 63 to 30. I mean, Duolingo's a beast. I love them. So that's why, again, the AI thesis is hurting them. Like OpenAI is creating a language learning app that's like free, and like Google is as well. But they're cool. If I just started, what should I buy now? Hey, I would buy, some safe companies and trust. Don't stay away from like risky, like meme stocks. Buy high quality S&P 500 companies. First off, buy the S&P because most investors in most hedge funds can't beat the S&P 500. So if you don't own at least the S&P 500, even as a little position, like 10% of your portfolio, it'll drive you crazy. So please buy the S&P 500 as the backbone of your portfolio. Then play around with some individual stocks. Buy the S&P 500 companies you use, like Google, McDonald's, Meta, Constellation Energy, or buy Amazon, whatever. So, I own Coca-Cola, Amazon, Ferrari. Buy some stocks that you find interesting, but also do your own research on them. Don't just buy Ford because you've heard of Ford before, because they're not too great of a stock. Do your own research on them. Anyway, so keep it simple. Just buy and hold. Interesting names here. Which one do we check out? Iris Energy. Okay, this is like a mini Coreweave play. Um, also, uh, oh, Decker's Outdoor. We meant to get to Decker. What do you think about ETR nuclear contracts with Stargate? Wait, is that a stock? Maybe we'll check out ETR after this. So here's IREN. This is Iris Energy, like a mini Coreweave. Ooh, TY or TI. Remind me to look at Meta. We got to look at Meta after this, and Zoetis maybe too. Zoetis is honestly at a fair valuation. Iris Energy. Did they get any? Oh yeah, this is the big deal. Like pun intended, this is a big deal. Iris Energy signs a $10 billion Microsoft Cloud deal and a $6 billion Dell hardware agreement. So this even before those deals went through, the best part about this stock has been how growthy they are. If we go to the revenue right here, the revenue went from 50 mil to 240 million to a new record, like up 355%. So the revenue's up to a record, and it's not just the top line that's growing, but the bottom line too. Actually, this was a little one-time adjustment. They lost money this quarter. Wait, wow. Okay, so yeah, they didn't actually make 380 mil in net income this quarter, but anyway, Ars Energy is interesting. I love how growthy they are. Analysts are expecting the revenue to just continue to grow. So I don't know if the risk reward looks too great on this one buying it right here, but they just got that big deal from Microsoft, which might add even more growth. So let's pull up Meta right here. Meta is like the cheapest Mag 7 play. Full disclosure, I do own Meta in my Robinhood Never Sell portfolio. We got 5 shares in them. They're trading at like 25 forward PE. Again, what their current PE is how just if you go to their net income again, the PE is the EPS multiple, and the EPS is the net income. So basically, the PE ratio is the net income multiple, but the net income it says it's only 2.7 billion because they had a $15 billion one-time tax adjustment. So when we exclude that, it was a record quarter. They did over 50 billion in revenue for the first time ever. They have the Meta AI Ray-Bans, the Meta Oakley Ray-Bans, the new ones that are kind of cool, which you can like scroll through Instagram ads on there. But they also, the Threads app, it's like a competitor to X, now legit has the near same amount of daily active users as X does. They're introducing ads to WhatsApp. This is a great company to just never sell. It's worth buying right now. Like if you have the intention to never sell like me, it's worth buying right now. Like it's such a great stock. They have like half the world is on one of their apps once a day. They have 3.5 billion daily active users. So let's check out Decker's Outdoor right here. This is a shoe company, apparel stock. A lot of the consumer discretionary names have just been hit. And I think the stock has just been a victim of the whole industry of like if a rising tide lifts all boats, I guess a sinking tide lowers all boats. I guess that's lowering Decker's Outdoor right here. But yeah, this is the company that owns UGG and Hoka. That's pretty much the only 2 things they own. Those are those shoe brands, like the UGG boots. Let's see how that again. Ever since Nike did something stupid. They focused all on their online digital strategy, removing their brands from the physical malls and stuff like that. So that made check out the UGG brand. Wow, it ramped up and for the fiscal year 2025. But look at the Hoka brand. Man, yo, my Wi-Fi is terrible right now. By the way, if you wanted to follow on, we stream every day. But yeah, look at how the annual revenue growth, just hits a new record every year. Then they just sell shoes, commodity of shoes, and they just have real growth behind them, and not just sales growth, but real net income. Check that out. They are printing net income, a couple $100 million a quarter. That's actually really impressive. What's the multiple? They're trading at 12 times PE. That might be cheap. I don't know. No dividend on this one either, so they're probably doing a lot of share buybacks or something. Who knows? All right. ETR stock. So, all right. All right, ticker D, Dominion Energy. That's what like the 3rd or 5th largest like utility, I think, or they're worth $52 billion. Oh, actually, no, never mind. They're not. I'm thinking of a different utility. But let's check out the dividend right here. So I know these utility stocks have very nice dividends. Hey, what up, Barella? Is that Bitfarms? I think that's just a Bitcoin mining company. Remind me to look at Bitfarms if I don't get to that one. But Dominion Resources, this might be a different company than this might not even be a utility company at all. But check this out, you get a 4.4% dividend. So that's a really nice yield, a 4.4% yield. Dominion Energy Virginia, Dominion Energy South Carolina, contracted energy. So yeah, it looks like a utility company. We go to their net income right here. Um Low PE doesn't mean it's undervalued. I agree. Exactly. It all depends. Um, but yeah, look at this net income they're making. Actually, it's had a nice little recovery. The net income looks great here on Dominion Energy. So let's see. They made $1 billion in net income this quarter. Let's go see how much the dividend costs because they have a 4.4% dividend yield. Let's go check out exactly how much it costs just for fun. And look at this. The dividend cost $570 million of net income exactly a quarter. So as long as they make $570 million net income a quarter, they're good. And looks like they're doing that. They had a little one-time adjustment this one quarter. It says they only made 170 mil. It was actually more than that. Yeah, it was probably around 600 mil. So yeah, nice. Nvidia, you know, we haven't even looked at Nvidia yet today. So let's pull up Nvidia stock. Let me sip my tea real quick. Okay. Oh, geez, I just like chugged that. Okay, here's Nvidia right here. Here's the thing I find I find a little tough about the stock. Oh, we'll look at SoFi after this. Oh, remind me to look at, oh, yeah, hey, what up, William? OUSC, we gotta look at Ouster. We gotta look at Ouster too. But if you look at the top right, this company is worth 4.5 trillion. So hey, they're worth 4.5 trillion. Here's the thing, you know, for you to double your money on Nvidia, they have to be 4.5 trillion. They now have to be worth basically $10 trillion pretty much. And I think, or 9 trillion, they have to be worth 9 trillion. I think it's a tough double versus some other stocks. You know, law of large numbers, it's a tough double, but I think this stock will still return like 8 to 10% a year, or still perform very well. Here's their market share, obviously 24% market share. They have this automotive software that Lucid and Uber use. It's almost like a competitor to Tesla that any company can have. If you like want to have an autonomous driving car, kind of like Tesla does, and like it's not LiDAR either. Like NVIDIA, like not like Waymo, how they do LiDAR. Like NVIDIA has a non-LiDAR competitor. It's actually good. Anyone can just get it from NVIDIA for a price. But anyway, they print money. If any other company can pull this off, they also deserve to be worth, you know, 5 trillion. But they made 26 billion of after-tax net income just this quarter. And at this growth rate, like that's up 60% year over year. And that's after paying, you know, over 2.5 billion in taxes. Like that's nuts. 56% net margin. So if you could spend $100 on an NVIDIA chip, they keep $56 of that after paying taxes. Like they're just a growth monster. Their data center business, you know, and they're so big, literally NVIDIA, you know, NVIDIA took $1 billion stake into Nokia, $5 billion stake into Intel. They also have stakes into CoreWeave, APLD, ARM, Nebius. They just like, they're a conglomerate. They're huge. So let's check out Ouster. And then we got, oh, SoFi. Hey, please spam me. Hey, we're made only. Please say SoFi again. We got to look at that one next. But here's Ouster right here. Key results on one page. Wait, so this company just reported earnings then. Let's go see what they reported. Oh wait. Is it okay? Let's go see company. So the orange line is what the analysts expected. So they beat on revenue, they beat on EPS, but they missed on EBITDA. But overall, looks like this is still a great quarter. The sales grew 40% year over year. That's really good. Revenue's up 40%, after grew 26%, after grew 98%. So they're on an insane little streak of growth right now. Also a good balance sheet. The assets are growing every quarter while the liabilities are staying the same. They're still losing net income every quarter, but that's still a beat versus what the analysts thought. Like they're losing less net income than expected. So honestly, Ouster is interesting. Still a small company. I wouldn't have it as like a huge major size position, but definitely interesting. So let's pull up SoFi. Let me turn on my fan too, because it's hot. So here's SoFi Technologies right here. This is a stock that's not just propped up on momentum. This is a stock that deserves to be doing this well. And full disclosure, I do own SoFi. I regret every share I've ever sold of SoFi. We're up 380% on them. They are up in the overnight market. It's like, same with Robinhood. I regret every share I've ever sold of Robinhood. I sold 50 shares way lower. But anywho, SoFi, I will never be selling another share of them. I'll actually probably be looking to buy more, but I wouldn't be buying more until like, if it gets to like $25. Like it's still too expensive right here. They're still trading at like 75 times next year's net income. But I wouldn't sell or trim if you had a position in this name, because this is the kind of stock that's just going to continue to grow and grow higher and higher. Here's why. Hey, Jace, remind me to look at Coreweave. Coreweave is a great one. But check this out. SoFi, they're a fintech. They have their own banking charter. If we go to their financial services business right here, the growth is phenomenal. It's legit up 105%. After grew 80%. After grew 222. After grew 80. Like, this is what justifies the high multiple and the high PE on SoFi. Like, no analysts were expecting that sort of growth. We can see right here, the orange line, beat on revenue every quarter, beat on EPS, which is net income every quarter, beat on EBITDA every quarter. So that's why people are taking SoFi serious now. They're making over 100 mil of after-tax net income a quarter. They're really growthy. So yeah, SoFi, I'm totally biased because I own them, but UAMY reports on Monday. Hey, yeah. So if you buy now, it's kind of like you bet into earnings. What is this stock? This is a $1 billion. They're worth $1 billion. This is that mineral company. So they're kind of like an MP Materials, but like a way smaller one. They own these certain like rare earth. It's a rare earth mineral play. I know a lot of the tensions has like de-escalated with China now removing the whole nightmare permit process to get for American companies to get rare earth minerals. They removed those. So that's why a lot of the stocks, the rare earth mineral stocks have been kind of loose in there. Hey, what up, Eric? Good to see you, homie. Do you think BMNR is undervalued? Wait, BMNR, is that Bitmine intermersion? That's basically I think that's just an Ethereum proxy. Let's fit over. Yeah, here we go. BMNR. So yeah, Tom Lee works for this company, which is pretty cool. But yeah, basically this stock, I think it literally just owns and stakes their Ethereum. Yeah, so look at that. Revenue from self-mining. I think that's the revenue from sale of mining equipment, whatever. So anyway, it's an Ethereum play, or Ethereum proxy, and it kind of just follows whatever Ethereum does. I wish I could give you more thoughts on them, but that's literally all they do. They just own. It's kind of like the Ethereum version of MicroStrategy. Okay, Tesla stock. So hey, what up? So would you rather SoFi or Hood? Ooh, that's a good, probably Hood. If I had to pick one, Hood, but both of them. Like if I had it, both are a great yes. It's like, yeah. So here's Tesla right here. I personally like, if we judge Tesla the way we legit, judge any other company, this is extremely overvalued. Over like $200 of its stock price is current future. This is like in the like literal. I've looked at the 2028, 2029 projections. Literally $200 of stock price is future hopium from their robots and their robo-taxi network, which I personally, it's a tough buy because the growth is kind of choppy. Like, again, if we look at their multiple right here, if their net income multiple, the PE ratio, they trade at 290 times PE. It's tough to pay that high of a multiple when the growth isn't there. Like, revenue's up 11. Last quarter, it was down 11, down 9, up 2. The net income was negative 36%. So the margins have collapsed. Their net margins down 40, low single digit margins. Gross margins are down 10%. Like, financially, it's a tough one to justify their current multiple. Yeah, we can see their total vehicles delivered, 400K this quarter, vehicles by model. Anywho, the financials, that all being said, me being bearish on their financials doesn't matter because the stock doesn't trade off their financials. It's just like a mind of its own. So it's just a mind of its own. 200 said, what's this app right here? Yeah, hey, by the way, this is actually a brokerage right here where you buy stocks on. They'll ask you for information stuff. If you want to get this brokerage I'm on, it's in the link tree in my bio, that very first link there. Or I'm actually not sure which brokerage you were. I got all three of these brokerages right here. These are all brokerages, where you buy stocks on. They all ask for information and give you a tax form at the end of the year. So yeah, if you want to buy stocks and if you want to get into stocks, you need to get a brokerage, I recommend this one right here. Very first link in the link tree in my bio, called Moomoo. Robinhood's the next one I'd recommend too. This one's completely free, costs nothing, no commissions, no fees, no nothing, and it has the best like analysis tools to like fundamentally analyze a company. Because you can buy a stock on any platform, but I love this one because of all the tools it has, and you get the idle yield on your cash. They do all these like cool events. Like it's just my favorite brokerage. Okay, so Elon Musk wants to bring back the Roadster. Oh, really? Actually, was that news at the top here? Let me read this. Elon Musk admits target to achieve 1 trillion compensation. Okay. ZESL. Oh yeah. Hey, again, if you want to get this brokerage, it's in the link tree in my bio. The very first link there. Wait, ZESL. I typed that one in. Or do you mean SEZL? ZESL. I can't find that stock. I did type it in though. JPM, or is that JP Morgan? JP Morgan's a phenomenal bank stock. Even look at this. This stock is at an all-time high. Even if you buy this stock right now at all-time highs, the company still has, a 1.8% dividend. They raise their dividend every year. You wouldn't believe how they print money. Check this out right here. If we go to their net income right here, they legit make, it's so consistent, 14 to 15 billion of net income a quarter. Like JP Morgan is printing the dollar hollows. So yeah, congrats if you're a shareholder of that one. Not only has they had crazy stock price appreciation, but you've also gotten that on top of the 2% dividend. So pretty cool. Gurok said BLLN looks interesting. What is that one? What the billion to one looks like? Oh, so they just IPO'd 2 days ago. Literally, they just IPO'd. They're worth 4.4 billion. What is this company? Billion to one. Let's check out their website, I guess. Our mission. Oh, it's a healthcare play. Okay. DNA molecular counting technology. It detects disorders such as sickle cell disease and cystic fibrosis. Interesting. Niche. Do they have sales? Probably not, because they just IPO'd, or they do. Okay, actually, they do. For the first half of 2025, so basically January through July, 125 mil of revenue, up 81% from the first half of 2024. So that's actually really good growth. They are leveraged, but you see how they have a lot of liabilities. But normally when these companies IPO, they collect a bunch of funds and instantly deleverage a bunch, kind of like Reddit did that too. So I expect maybe the balance sheet to fix itself. And I'll put them on my watch list. Again, I don't like buying companies right after they IPO because there's some lockups where, about a month or maybe it's 3 months, 90 days after, then the insiders can sell their shares. Anywho, actually an IPO that finally I kind of just bought. They IPO'd a while ago. I bought some Weebull shares in my Roth IRA. Where is it? Roth IRA. Let's see right here. Bull right here. I didn't buy much of them, but I bought 5 shares of Bull stock. The only reason I bought Bull super quickly is Weebull is that stock right there. BULL is this brokerage, this app right here, publicly traded. And this app just brought prediction markets and crypto to the app. And I think that's going to make them a lot of dollar hollows. So, all right, let's see here. Sadly, user58, we actually just looked at ticker symbol DECK. By the way, if you missed anything, I'm also streaming on YouTube. You can rewind it. Hey, Carlos, I was doing a deep dive on Credo Technologies, and you guys won't believe what I found about this stock. I realized why their margins are so high. This company is actually headquartered in the Marshall or the Cayman Islands. So what does that mean? They pay no taxes. They've never paid any taxes to anyone ever. So, but that doesn't matter because they're so growthy. The revenue's up 273% after it grew 70%. Like the growth of the revenue is insane. The same with the bottom line, 63 mil of net income. Oh, jeez. I need to get a tissue. Okay, sorry about that. It's always winter time. There could be a bunch of pollen in the spring. It'll never give me sinuses, but in winter, it always hits me. Okay, but Credo Technologies, 63 mil of net income. That was great. Also, a phenomenal balance sheet. Literally no debt at all. Completely debt-free company. They have $480 million of cash, and that cash is also earning interest. They made $4 million of interest on their cash. So, pretty cool stock. They're beating on expectations every quarter, but they are headquartered. I don't know if this is even a bad thing. Okay. Why did you say buy bull, bro? Hey, Leonel, check out my most recent YouTube video. I just made it. I wouldn't have it as a meaningful size position, but if you want to see my bull case, it's my whole analysis on bull stock. Yeah, go check out my most recent YouTube video. By the way, that's the best way to support me. I sell nothing. I have no course, book, WhatsApp, none of that. But I do have a YouTube channel called Nathan Robert. You can just type into YouTube Nathan Robert, or it's in the link tree in my bio. PayPal. Hey, what do you mean there? PayPal. Okay, I know PayPal. Let's see. PayPal stock. So this company just reported earnings. Sadly, this one hasn't done too well. PayPal is the same price that it was back in 2017, but PayPal actually just announced a dividend for the first time ever. They've had some recent partnerships. I think they partnered with OpenAI. They partnered with Wix. PayPal faces consumer spending slowdown. PayPal's buy now, pay later services impact mortgage approval process. FICO plans to include buy now, pay later data into credit scores. Well, that should be in there for sure. Okay, let's see here. PayPal. This is the best part. Like, again, before today, they had a good earnings report this quarter. There was a big beat on expectations, but the reason the stock has done so bad is because they're a slow grower. Like before today, like 5% growth, 1, 4, 5, like low, mid, single digit revenue growth. But they print net income. So here's honestly the best part about PayPal right now. The reason why I really like this one, they have, hey, Huckleberry, no way, dude. It has been a long time. Good to see you, man. But the best part about PayPal, the thing that's crazy, is if you look at the top middle here, they legit spend over $1 billion of after-tax net income every quarter solely buying back their own shares. And if you're wondering, what did those share buybacks do for you as a shareholder? Here's what it does. If you go to the net income's up by 23. So net income's up by 23, but the net income per share is up by 31. Remember, the EPS growth rate and the net income growth rate should always be the exact same. Only thing that changes it is the share part of the ratio. So it makes the EPS go artificially higher, which makes the PE ratio go artificially lower. It also gives you more ownership in the company. Now that they start paying a dividend when there's less shares that exist, it makes the cost of the dividend go down. So in short, share buybacks forces the stock to go up. But honestly, I almost would rather of them have done an acquisition instead. They spent, $7 billion of net income the past year buying back their own stock. What if they did another acquisition like Honey or Venmo? Because they own Venmo and Honey. I don't know if they acquired them or just made them, but pretty cool. Honestly, I don't know if I really expect them to outperform the market in the long run, but that dividend is certainly interesting. Some mind said, Maine. Oh, yeah. Hey, this is actually a pure dividend stock. If you're looking for basically a stock to maximize your dividend income, check out MAIN. This is a BDC, a business development company. They do first lien loans, second lien loans, and they pay a monthly dividend. That's the crazy part. They're one of the few companies out there that pay a monthly dividend, and the dividend is sustainable. If you look in the middle here, they have dividend. They have a 6% dividend yield. So, yeah, you get a nice yield with Main Street Capital, and and the dividend is safe. If we go to their net income, they're making over 100 mil of net income a quarter. So they're making over 100 mil of net income a quarter. Let's see how much the dividend costs over here. And the dividend only cost 84 million. So they do have room to raise the dividend, which is cool. Okay. But yeah, you don't expect them to outperform the market in the long run, but they're actually one of the better monthly paying dividend stocks. Like they're better than Realty Income, I think. Futures are popping if we get a great deal. Apparently though, if we look at the market right now, congrats if you own stocks. Most likely your portfolio is doing very well because look at this. The QQQ is now up over 1%. S&P's up 0.66, but yeah, the government shutdown fears are mostly over. It looks like with the poly markets, we were just looking at the government shutdown probabilities are like, it's basically nearing an end. So that's markets kind of rallying on that news. Okay. Someone said, is ISTR a good stock? Well, I don't know. Let's check it out. I have not heard of this stock before, actually. So the stock has not done too well. Yikes. So it's actually the same price that it was in 2019, or actually even further than 2017. So you bought the stock 8 years ago, the stock is the same price. Plus, they've paid no dividends. But good news, actually, check this out. They are net income positive every quarter. What's the market cap on this guy? Oh, so a very small company. They're only worth 230 million. So they're worth 233 million. Again, I don't really love companies that are that small, the $233 million companies. But, out of all the companies that are worth 200 mil, I want to get the one that actually makes net income every quarter. And they're making, 5-6 mil in net income every quarter. Bit leveraged balance sheet, but the leverage ratio is going down. And check out what the analysts are expecting. They did 23 mil of revenue this quarter. Analysts are expecting 37 mil in 2 quarters. What did they do exactly? Financial holding company, full banking services, loans, industrial loans. So, hey, it looks like some financial company. REGN. Let's do REGN. This is apparently the company that, like, whenever you have a weight loss prescription, I can't say that other word. That's why I always say prescription. Whenever you have a weight loss prescription, you lose a lot of muscle mass. And apparently this company has this prescription where you take it with Ozempic and you don't lose your muscle mass, something like that. I don't know. But one of the main reason, that's a very small thing, but like 10% of their business or something. But the main reason the stock is tumbling down right now. And this used to be, you see how it says ILA is 18% of the revenue. If we scroll back, used to be, to 25%. Basically, there's another company out there that is infringing on ILA's patent. Wow. Look at these year-over-year declines, down 40. But also, they have this higher dose version, ILA HD, that they're trying to sell instead. It's only up 9%. It's not offsetting it enough. But other companies are infringing on their patent, and the courts allowed it. So basically, they don't have a patent on this product anymore, and anyone can use it. So basically, 30% of their business is almost like gone, and that had to be priced out of this company. But yeah, they're working on these other things like collaboration revenues up 18%. They're dog cheap of evaluation. I mean, their net income, they're making $1 billion of net income a quarter plus. So they're making over $1 billion in net income a quarter. And they just started paying a dividend. The dividend only cost 90 mil. So literally 9% payout ratio. And since they have so much leftover money, they're doing insane share buybacks, like 500 mil to $1 billion of share buybacks a quarter. That's actually insane. So here's what that does for you. Net income is up by 8, but the net income per share is up by 18. I'm going to actually put them back on the watch list, and the free cash flow is so good. Again, the main fear here is this ILA revenue, but that's a cheap valuation. I think the risk to reward looks pretty decent on that one. All right. Hey, what up, 6-star? Good to see him. He said BRZE. Is that Braze? I actually don't remember what this company does. They're at an pretty much all-time low. I feel bad if you own this stock. So, yeah, the stock hasn't done too well. They're a $3.1 billion company. What do they do? Actually, let me just go over here and check. So, customer relationship management platform. I guess if we go to their website right here, rewrite the rules with customer engagement with AI. Oh, it looks like a lot of companies trust them. Okay, so some sort of, let's see how much money they're making. So revenue is up. Hey, nice. The revenue's up 23%. After it grew 26. After it grew 33. After it grew 61. So the growth rate is slowing a bit, but that's all right. It's still growing nicely. Double digits. They're still losing 30 mil in net income a quarter. Do they just do like an acquisition? No. But that might, I wonder if their moat is maybe they might not be an AI beneficiary. Maybe like they have nothing protectable or like check out the Morningstar research if they have anything. No, they don't. All right, whatever. All right. Anyway, I don't know. I wish I could give you more thoughts on them. I wonder why they're struggling. I mean, they're still losing money every quarter. That might be why. Echo Star. Hey, Dev. Hey, if you give me the ticker symbol, we can check out that stock. I'm not actually sure what stock that is. Someone said XPing or XPEV stock. So yeah, this is kind of like a Chinese Tesla competitor. They sell electric vehicles. Let's see if there's any news on this company. Xpeng partners with Alibaba AMAP for global robo-taxi service across 200 countries. Plan to include 3 self-developed models. First, well, that's interesting. Xpeng Xpeng reports record monthly deliveries. Well, anyway, let's go look at their numbers right here. Again, I don't love the Chinese names, but they're really growthy. Again, this is in USD. We've converted the currency from Chinese yuan to USD. Revenue went from 1.1 to 2.5 billion. And on this 2.5 billion in revenue, they did still lose money, but they barely lost any net income. They only lost 66 million. Like, that's great. They're barely losing any money. That's actually phenomenal news. And whoa, the revenue is 2.5 billion. This was a record. It's supposed to be 3.5 billion. And they're supposed to go net income positive. So there you go. Interesting. Hey, shout out to the homie Isaiah. He says, thoughts on HIT, small company but gaining cash. Let's check it out. Health and tech. Are you talking about this one? Let's check it out. Hey, Aaron, we'll check out SEZL after this for sure. Hey, remind me to look at, well, maybe we'll get to JD too. That's a Chinese retailer that's kind of trash. But here's health and tech. This is 164 million. Like, there's a lot of Chinese ETFs that like go out of their way to exclude the Chinese retailers. But health and tech right here, they're worth only $160 million. But let's check out their numbers right here. Here's what's interesting. They're net income positive, actually. So they made 600K of net income. You know, it's after paying over 100K of taxes. So the revenue surged up to 9.3 million. You know, that's 40 million annualized. Good balance sheet as well. So that's a good margin as well. 7% net margin. Cash from operations was $1 million. So out of all the 100 mil companies, this one's definitely interesting. I wouldn't trust it with a lot of money, but maybe I'd keep a little position in them. I don't know. And that certainly is interesting. So actually, I should have checked their net. I think they had like 20 mil of cash or something. SCZL, I think this is like a competitor to Dave. They're a fintech. They trade at 17 times PE. Hey, Angela, if you got a stock you want me to look at, let me know. Thanks for that gift there. I appreciate that. Hey, what up, James? Good to see you, man. And Eldo, what's up? So here's Sezzle right here, 17 times PE. Let's see, their reported earnings. Let's see here's the orange line is what the analysts expected. Analysts expected 104 mil of revenue. They did 116 mil. They beat on EPS and they beat on EBITDA. So it's a triple beat quarter. I'm not actually too sure why the stock gapped. Like, it was interesting to see because this is the best part. They're making good money every quarter, 25 to 30 mil in net income. Again, they trade at 18 times net income. Like, they traded at fair valuation and they're really growthy. Like, I feel like they could trade up to over like to a 25 PE. That would send this to back up to like 80, 90 bucks a share. But check this out. The revenue is up 66%, after grew 71%, and the margins are just insane. 70% gross margins, 20 to 30% net margins. Just everything there fundamentally is headed in the right direction. So because the fundamentals are so good, that's why I'd buy that one. Not financial advice. So hey, Adrian, what up, homie? He said Qubits. Let's check it out. Qubits earnings. Let's actually see. System-wide sales contributed 1.8 million. Still a very small amount of revenue. Nearly half of revenue supported by engagements with Skywater. Okay. Gross profit increased. Liquidity improved with 540 million raised from issuing shares. Yeah, I bet they have a fortress balance sheet now. Let's see. So they have $840 million of cash. Let's see how much interest they made on that. Still none yet, but it's still so 3 million. Like, the whole company, they did 3.8 million in revenue. Like, this is still too tiny revenue for me to really get excited about this company. I'm always so bearish on this stock, and I know you love it. I feel bad, but the revenue is still too small to really justify a $10 billion valuation. But remember, they had 800 million of cash. That's like about 8% of the company is their cash on hand. Like, the entire market cap, 8% of the entire market cap is just their cash on hand. So that's interesting, but still too small revenue numbers for me to get really excited about. Hey, we just looked at Xpeng. Hey, by the way, if you missed anything, I'm also streaming on YouTube. My YouTube channel is called Nathan Roberts, also in the link tree in my bio. But we literally just looked at Xpeng like 2 or 3 stocks ago. Uh, let's see here. Datadog stock. Hey, this company got added into the S&P 500 not too long ago. Check that out. Wait, did they report earnings? Yo, they had a crazy gap up on earnings. Let's go check out the earnings hub real quick. So enterprise customers with ARR, which is annual recurring revenue of 100K, increased 16% to 4,060. So they have 4,060 customers that are paying over $100,000 a year. That's insane. And it grew 16%. So that's a kind of a cool metric. 4,000 people paying over 100. And it could be more than that, Uh, non-GAAP operating income improved 23%, cost discipline, higher gross margins, operating cash flow 200 mil. So anywho, that must have been the good news there. Let's check out the expectations. So yeah, they beat on revenue, they beat on the EPS, which is net income, and they beat on EBITDA. It was a triple beat quarter. No wonder they gapped up so much. So yeah, congrats if you on this one. Okay, that's interesting. Okay, BBWI. What is that one? Bath and Body Works. Yeah, this is that mall stock. No, you don't really buy this stock expecting to outperform the market in the long run. It's kind of like a consumer discretionary swing trade kind of stock. This stock is the same price that it was in 2006. So you bought the stock in 2006, it's the same price that it is today. They're kind of just a slow grower. Like if we go to the revenue right here, the lifeblood of the company, the sales, it's low single digits, 1%, 2%, 4, 3, and some of these are negative as well. So, not, and they're leveraged as well. They have more liabilities than they have assets. They are net income positive still, but again, it's just not a quality name. There's no real, like, this isn't like they have brand value, but there's no real IP, patents, no moat on this company. They're just a discretionary name. I'd kind of rather just buy an Amazon or something. Hey, Ahmed, what up, dude? He said ALAB. Let's check that one out. Hey, what up, Ellen? How's it going? So, Astera Labs, this is a great company. No, not financial advice. I would definitely put this one on the watch list because their financials are so quality. Like this is a quality growth name in my opinion. If we go to the revenue, like this is what justifies their high multiple in my opinion. Revenue's up 103, after grew 206. Like the revenue went from 10 mil to 70 mil to 230 million. Like that is crazy. And then they're not just going their top line, not just the revenues. Yo, dude, try not to spam there. Hold on. Sorry, I gotta mute this guy. Yeah, hey, sorry, I'll try and get to all the stocks here. But yeah, the revenue is 230 million. And if we go to their net income, they netted 91 mil of net income, 51 mil of net income last quarter, and 31 mil, 24 mil. So they're the most profitable they've ever been. Great net income numbers. So, yeah, there's Astera Labs. Actually, I would definitely put them on the watch list. I probably wouldn't buy them here, though, but definitely interesting. So, hey, Orlando said TMO. Yeah, hey, this is a slow grower, not financial advice. So yeah, the lawyers have straightened me up. But yeah, here's Thermo Fisher. This is like a medical device play. They've haven't just impressed me. Like if you go to the revenue right here, their sales, it's also just low single digits or mid to low single digits, like 4%, 2, 0.1, 4, 0.2. Negative. So I just wish the sales growth would come quicker. They also lost their margins a little bit. Their net margin did fall 5% year over year. But this is the good news. They're making, dude, I'm drinking this turmeric black pepper ginger tea and it is spicy but this net income is great. They're making 1.5 to 1.8 billion of net income a quarter, and again, it's not growing, which is bad, but that net income allows them to pay a dividend. They pay a dividend and the dividend only cost 160 million, so they have so much leftover money that they can do whatever they want with. And since the dividend costs a little, that allowed them to spend $1 billion on share buybacks this quarter. So if we go to their net income right here, the net income income actually fell by 0.5. So the net income fell by 0.5, but the EPS actually grew by 0.5 because of the share buybacks. They got $4 of EPS a quarter. So anyway, that's interesting about them. Hey, what up, Theo? He said TE stock. TE. This is actually I've never heard of this stock. T1 Energy. So a very small company here. They're worth $730 million. So a small market cap, but they've had a bit of momentum the past couple weeks here. Check that out. Yeah, congrats if you own this name. Let's see what they do. So revenue looks like they finally have revenue, 130 million this quarter. Out of that, though, they did lose 30 mil, 16 mil, 300 mil. So think about that. The entire companies were 700 million, and they lost 300 mil that one quarter. 30 mil. The losses are narrowing, which is good. I wish I'd give you more thoughts on them. For some reason, we don't get too much data, because they just started selling their product or something, or the earnings report is, I don't know. Looks like analysts are expecting 2025 Q4. That's a big jump. Oh, yeah. So they literally did just start selling their product. 2024 Q4 revenue was 2 mil. And in 2025 Q4, it's expected to be 300 mil. So anyway, it looks like a lot of future growth expected. I don't know. CEY. Hey, what up, man? EXPE. All that jump because they hit earnings. Should we expect a correction? Let's check it out. Wow, they're up 17%. Yo, congrats if you own that one. Literally all-time high. So if you've ever owned this company, you're definitely up on your position. Let's see what they have to say. Their business-to-business segment grew 18% year over year, outperforming their business-to-consumer growth of 7%. So yeah, business-to-business is doing better than business-to-consumer, which makes sense. Their lodging revenue increased 9%. That's 82% of their entire revenue. Gross bookings rose 12%. Expedia, this is some vacation type stock. They own Trivago. Anywho, yeah, this was a great quarter. They really did make 960 million of after-tax net income. That's after they paid about 180 million of taxes. So that was a good earnings report. And it looks like, I don't know, they just started paying a dividend or something. But anyway. Hey, what up, Sam? He said Rocket Lab is the best investment out there. Well, I don't know about that, but Rocket Lab is certainly one of my favorite space plays. Actually, my favorite space play is Rocket Lab, and they report earnings tomorrow. So if you buy the stock now, it's kind of like you're betting into earnings. They're overvalued, for sure. They're trading at 100 times. They're expected to lose net income for the next couple years. So the net income the multiple is infinite. But this is the best part about Rocket Lab. I've looked at all the space stocks out there, ASTS and Lunar, and this is the best one. They have real growth, real contracts, and they actually report earnings tomorrow. They got new. Yeah, look at this. So Rocket Lab completes 74th Electron mission, secures a 6th launch deal with IQPS. Rocket Lab preview and LOX sat mission update. So pretty cool. Let's see. Revenue of 150 mil expected. But if we go to right here, their space systems revenue, this is, most of their business. 67% of the revenue is their space systems. It is up 30% year over year after grew 94. Literally 2 new records. So their space systems revenues at a record. Ooh, and also their launch services business. This one's also been really growthy at a record. It's never even been close to 46 mil before. So, yeah, both businesses are booming. They're beating on expectations. Analysts expected 135. They did 144. So, and again, they report earnings tomorrow. So expect a huge either gap up or gap down on them tomorrow. They lose a lot of net income. Hey, big mans, what up, dude? Hey, I love Google. Alibaba stock. Hey, that's a Chinese. Between JD and Alibaba, I would definitely rather pick Alibaba because they have a cloud business, a GPU business, a B2B, B2C business. They own AliExpress. This is probably one of the top 5 best Chinese stocks if I had to pick one. Probably top 3, actually. But check this out right here. They own, if you probably heard of AliExpress before, Mainly that's a B2B play. Amazon is more business to consumer, business to customer, but Alibaba or AliExpress is like e-commerce, like Shopify website owners buying stuff in bulk from Alibaba, AliExpress. I keep saying that. But anyway, they also have this cloud business. Their cloud intelligence play has been growthy. They've been signing new deals. Nvidia can no longer sell their chips in China or something, and Alibaba is apparently like filling that with their own chips. They now pay a dividend, a 0.63% dividend. This is Charlie Munger's last pick. They traded a 19 PE, which is fair for this company, but they make good net income too. This is converted from Chinese to USD. They're making if you average it out, $4 billion net income a quarter plus. Look up MT. Hey, what up, Marco? So yeah, MP Materials, this is a company that the government took a 10% stake in this stock. So the government has a 10% stake in this company. They're opening up this one rare earth mineral mine that'll literally supply the U.S. for the next 50 years with certain rare earth minerals. So materials, key earning takeaways, key points to watch. Key material segment declined 50% due to halted China sales. Magnetic segment, I don't know. Yeah, check out the future expectations. Revenue is going to go from 60 mil to 150 mil in 2 quarters. That'll be interesting. What happens? Yeah, hey, what up, Brody? Yeah, hey, by the way, this is a brokerage right here. If you want to get this brokerage, they ask you for a bunch of information. You get a tax form and stuff. If you want to get this brokerage, it's in the link tree in my bio, the very first link there. It's just called Moomoo. You can type it into Google, brokerage called Moomoo. Full disclosure, it is an affiliate link. So let's see here. Gary said NTLA. Let's check this one out. Intellia Therapeutics. So a $1 billion company, very small market cap. Looks like there was a big gap up before earnings and then a big nasty fall when the earnings report came out. So they're only worth $1.1 billion. Let's go see what they reported. Well, so here's bad news. So think about that. Basically, the whole company is worth $1 billion. And you're buying a company that loses $100 million plus of net income a quarter. So that's literally 10% of the entire market cap, 10% of the entire company. They lose in net income a quarter. So that's what, someone just said in chat, NTLA, another reason they gapped down is one of their test patients passed away. Wait, let me go to the daily right here. So look at this. They gapped down on this day. That wasn't the earnings report day. That was a different day. So interesting. So so whenever you lose net income like this, that money has to come from somewhere. So the assets on their balance sheet is kind of been slowly declining. But the revenue is still, look at that. The revenue grew 51% year over year. So the revenue had really nice growth. I don't know. Okay. Thoughts on Walmart? Yo, Walmart's a great never sell grocery store. I love that they own Sam's Club as well. Sam's Club is like a competitor to Costco. That's just such a great business model. You have to have a subscription to get into Sam's Club or get into Costco. And whether or not you go to the store, you still pay them that high margin subscription fee. And they print money. If you go to they're honestly a huge real estate play. So if you go to their net income, they make $5 billion plus of net income every single quarter, get a 1% dividend yield. They were actually the best performing stock in the S&P 500 during 2008. Same with McDonald's. So they're kind of a good one. Same with Costco. The valuation still on those two might be a little high. Let me actually see, did Walmart report any earnings recently? November 20th. So that's when they report earnings. That's a bit. So CELH. So this is Celsius. They actually just acquired Rockstar Beverage from Pepsi. Well, Pepsi took a 6% stake into them and gave them Rockstar Energy. But check this out. Here's what they just reported. Their revenue growth was fueled by acquisitions from Alani and Rockstar Energy. And when you exclude that, 44% organic growth of the Celsius brand. Now, that is the part that I found the most impressive. So there was a $250 million distributor termination cost related to the PepsiCo network, or transitioning Alani to PepsiCo. So PepsiCo, that was one of the best things, is now going to distribute and manufacture and bottle the stuff for Celsius. But yeah, That's why if we go to their net income, the net income was negative 60 million. It wasn't actually. If we go to the operating profit, the core business actually made 166 mil. The sales were super crazy. Again, the actual Celsius brand, organic brand, grew 44. But when you add in Alani, which I love Alani, and Rockstar, the total sales grew 172%. So the growth is finally back. They're making the actual net income every quarter when you exclude that one-time 250 million termination whatever fee. So Celsius, I actually really like. Honestly, let me do some quick math here. Well, let's go overestimate here. Let's say they're going to make like 200 mil a quarter, 2468 market cap. Actually, they're actually at a really fair multiple. Actually, no way. Oh no. I wonder what Weebull has as a forward PE. What's the forward PE on Celsius? They're trading at 33 times forward net income. You know, it might even be, I honestly, if they fall another like back to $35, especially with the whole Pepsi transition, they're certainly interesting. Oh, speaking of cool bottling stocks, I cannot wait to see how this stock opens tomorrow. I've never seen this happen in my history in the market. This company, you ready for? You're not going to believe this, but this is true. On Friday, this company bought back 22% of all the shares that exist. If you're wondering, what do you mean? How is that possible? So basically, this is the Coca-Cola bottling company. If we go to the shareholders right here, the Coca-Cola company is the largest shareholder. And they announced they're buying back all the shares from the Coca-Cola company. That's because the Coca-Cola company is on the board of directors for the Coca-Cola Consolidated. And it was a conflict. So they just decided to buy back all the shares from them at $127 a share. It's $137 today. So I guess that's it. So I can't wait. And they literally announced this on Friday after the market closed. So the market couldn't react. I actually wonder, they're such a low volume stock. I bet there's no volume in the overnight market. Yeah, or there is, I guess. Anywho. Yeah, this is actually the Coca-Cola bottling company. They bottle for Monster. They bottle for Dr. Pepper and Coca-Cola. There's a cool company. All right, we'll get a few more here. Then I got to run. All right, let's see. What up, Steve? You said CALX. What is that? Calix? The stock's actually done really, really good since 2019. That's actually, look at that. You know, it's $11. Now it's 65. Let's go check out their financials because that's what matters. Single segment. It's not going to tell me what they actually do. What do they do? Provides cloud and software platforms. Well, what's their website? You know, you're not getting my cookies. What is this? They don't tell you really quickly what they do. Automate operations. So some sort of AI subscription company, software infrastructure. So let's see. What are they reporting versus analyst expectations? So analysts expected 246 mil of revenue. They did 265. And they beat on EPS by double. They expected 10 cents. They did 22. EBITDA was a big beat as well. So it was a triple beat quarter. That actually is probably why they gapped up or doing so well on earnings, because they're beating on what the analysts expected. The growth is back. Wait, they're net income positive. That's after paying $3 million of taxes. This is really good. Fortress balance sheet, legit. Looks like no debt on this company as well. They have 340 million of cash. Does that earn interest for them? It does. It made them $3 million of interest, so that adds to your bottom line. That's interesting. CALX. My KO expires on 11/4. Hey, nice. Yo, that's a different Coca-Cola company than this one. You know, that's the Warren Buffett Coca-Cola stock. You know, if we go to Warren Buffett's portfolio, you know, obviously his largest holding is Apple. That's 23% of his portfolio. But his 8.8% of his portfolio is in Coca-Cola, ticker symbol KO. This is the one with the juicy dividend. Check this out right here. And they're about to probably get a bunch of money. Basically, they're going to get $2.6 billion from Coca-Cola Consolidated, but they have a 3% dividend with this company. They slightly raise their dividend every year to keep up with inflation. But here's what you're kind of hoping for. You don't expect Coca-Cola to really outperform the tech-heavy S&P 500, but you get a 3% dividend, then you're just hoping the stock goes up by 3 to 4% every year. So you on total return, you get 7% total return a year. So and they pay a qualified dividend. They're great. Uh, Thanks again for spending your time with us. Got to jump off. Hey, have a great rest of your night, Bob. Dude, I don't even know you're still here. You've been here for a while. Hope you have a great rest of your day, man. Yeah, I'm actually about to get off here in about 10 minutes. So yeah, by the way, if you want to hit the follow button, we stream every Sunday this exact same time. By the way, I sell nothing. I have no course, book, WhatsApp, Telegram. I'll never follow you, DM you, nothing like that. All I do is, all I have is a YouTube channel. Oh, when I have an affiliate link, or someone said, RA said, what app is this? Yeah, by the way, if you wanted to get this app, or this is a brokerage right here, it's in the link tree in my bio, that very first link there. It is an affiliate link, full disclosure, so I do have that full disclosure. So, all right, we'll look at a couple more here. BBAI, yeah, I don't know about that one. Or BBAI, I think they just have like one data center like contract. JD story, JD. Oh yeah, that was the Chinese retailer. Yeah, not a good stock. I don't really expect to do good, but you do get a nice dividend. You get a 3.2% dividend, but not a real quality stock. Let's see if AI has anything to say. Expected to see revenue growth, retail, logistics, margin pressures. Yeah, I'd rather honestly, if you like JD.com because of their business model, you'd rather buy Amazon. Like Amazon is like them plus more, plus maybe more innovative. That one's kind of like a higher dividend Amazon. That's not as growthy. Unfortunately, Apple, please. Yeah, hey, Mag 7 Apple. Let's do it. Pretty much all-time high on Apple. You know, instead of buy an Apple phone every year or new iPhone every couple of years, just dang should have been buying the stock. But hey, if you own the S&P 500, you know it's the second, third largest holding in S&P. You know you've benefited from Apple going up, so don't worry about it. You know I own a lot of the S&P 500 individually as well. Like I own Google. Apple's one I don't own individually just because the multiple has been, or just always been more expensive than all the other names like Google. But yeah, Apple all-time high. A lot of people are locked in the Apple ecosystem. Let's see, their smartphone. So they have a smartphone market share. They have a 17% smartphone market share, and they actually started making their own smartphone or chips. Their smartphone chips. They used to use like Intel chips and Broadcom chips, but now they're starting to make their own Apple chips, which is interesting. So if we go to their iPhone, that's literally half their business. Half their sales are their iPhone business. And then they have the services business. So whenever you go spend $100 in the App Store, they legit take $30 of that. They collect royalties. So they a 30% service fee. So that's over 100 billion of annual revenue for them. You know, then they have the wearables like the AirPods and the Mac sales, the iPads. Here's also why they're affected by tariffs. You know, the US is only 36% of the revenue, you know, then EU's 26, China's 15, and all these other countries. But a great never sell company that prints money, legit 25 to 30 bill of net income a quarter. Like, and then they just spend it all on share buybacks. Yeah, you can see the short interest down here as well. Apple, who would be short? 0.7% short interest on them. Yeah, let's see. Apple iPhone Air faces limited consumer interest despite design innovation. I've never even heard of that. iPhone Air attracts only 10% of iPhone 17 tires. Oh, yeah. So here's what's really cool. Apple reports signs a $1 billion Google AI deal. So they're going to be paying Google $1 billion a year for their Gemini. They're going to integrate that into Siri. And then they plan a budget Mac, apparently. Apple expands satellite features beyond emergency SOS. So yeah, that was a cool new feature that they did. Like where you like move your phone where it like aligns with the satellite for... Anywho, Apple's a good never sell stock. I don't know if I'd buy it here though, but they're cool. All right. Well, okay, Oracle. Let's do Oracle. Last one, probably last one here. So, sorry, we've been streaming for over 2 hours, and I'm real tired. I gotta go. But let's look at Oracle right here. Let's check out the news here. Oracle. Okay. I know they gave like was it 400 billion or maybe it was 300 billion, like a 300 billion a year revenue. Yeah, it was $300 billion for the 2030 year of revenue. Which so basically that's the whole reason they gapped up so aggressively this day. There's going to be apparently so much future revenue growth at Oracle from this year cloud play, cloud and software business. I'm a big fan. If you like a cloud play, if you buy Amazon and Google, you get two great cloud businesses as well. But it's like a pure cloud play, 0.75% dividend. That's really what's been growing a lot of Amazon and Google's market cap recently is that cloud growth, and that's probably why Oracle has been doing so good because they're like specifically the cloud business without all the other stuff that's been not growing as fast. Like this is the thing that's growing the fastest. So anyway, Oracle's interesting. They're opening up, they said 27 new data centers. And when they announced that day, the whole AI ecosystem went up, like Supermicro went up, AMD went up, CEG went up. So anywho, I got to go sadly, but I hope you guys have a phenomenal rest of your Sunday. If you wanted the follow button, we stream every day, every single day. Every Sunday, this exact same time. This is our second stream of the day. We already did a 3-hour stream earlier today. We just did a second. Oh, no. Hey, actually, wait. We got to look at one more here. Shout out to the member, Brian, on the YouTube stream. He said FR. By the way, that's the best way to support me if you want to. Just subscribe to the YouTube channel. I'm trying to build on my YouTube channel because I don't get many views on YouTube. Like I get a lot of viewers on TikTok and stuff, kind of. Well, not really, but I barely get any views on my YouTube channel and my stuff. So if you want to help me out, that's the best way to. So FRUE. Wait, hey Brian, I can't find that stock. If you tell me the name of the stock in the next 30 seconds or less, I'll check it out for you. But let me end the stream with a quick portfolio update. In the overnight market's booming. Yo, congrats if you own stocks because check this out. The QQQ is up 1.12% right now because the government shutdown is pretty much over according to the poly markets. So our portfolio, our main, if you look in the top left, this is called our dividend only portfolio because every stock in here pays a dividend. And most of these, as you can tell, are like dividend growth companies like Meta, Google, United Rentals, CEG. They all have dividend yields of 0.4%. But yeah, we also have a Roth IRA. A Roth IRA is basically tax-free retirement account. Oh, hey, Nesso. Actually, let's look at Ball real quick. BALL. Oh, yeah, but this portfolio, this is our buy, never sell account. Or once I buy a stock in here, I never sell it. And then we also have our Weebull portfolio right here where I kind of just do whatever I want in here. We're up 18% all time. Haven't done too great in here, but the overnight market's doing great. AMD's up 2.7. Dave's up 2.7. Hood's up 4. Is anything down right now? Nothing's down, I guess, except TAP. Wait, let's check out. Wait, hey, Brian, if you give me another stock really quickly, I can check it out super quick. Here's Ball Corp, $13 billion company. Ticker symbol Ball. Hasn't done too good, actually. It's way lower than it was in 2019. Your YouTube don't show videos for every day. Yeah, hey, turn on the notification bell. Or yeah, I don't know. But yeah, this is a beverage packaging company, beverage packaging in US, beverage packaging in Europe, beverage packaging in South America. So that's interesting. You get a 1.6% dividend, a very low payout ratio, a 6% payout ratio. Let's see here, ball.com. The request is blocked, so we're blacklisted from viewing their website. Let me try it on my PC right here. Ball.com, is it banned in the US or something? Oh no, it works on my PC. Weird. Yeah, look, it looks like they can these metal bottles or something like that. So anyway, where have I seen those metal bottles before? Oh yeah, a certain type of don't know. Wish I could give you more thoughts on them. I do apologize, but it does look like they're making, if you average it out here, yeah, a 200 to 300 mil of net income a quarter. Franklin, US. Yeah, hey, I think that's an index fund. Yeah, that's an index fund. So I don't think I'm gonna be able to find that ETF. So anyway, I'm sorry guys, I gotta go. Hope you have a great rest of your night. See you guys very soon. Hit the follow button. See you later. Oh, hey, if you're still on the YouTube stream, please, if you haven't already, you probably have, but if you haven't already, please hit the like button. It still helps me out if you still hit the like button, even though the stream's ended. Hey, sorry. I'm